Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is Friday, May 10th, 2024. Today, most interesting data coming out was the consumer sentiment report, which was on a few headlines, at least on CNBC today. And it was notable because it was a pretty big drop from the last and the expected. We were expected to go down just a little bit, and it dropped quite a bit. And so consumer sentiment is kind of like, am I going to be buying stuff soon or not? And they do a survey, the University of Michigan. It's been a great leading indicator for markets for a long time, and it's a questionnaire that goes out randomly across the country and it asks are you going to buy a new refrigerator? Are you going to buy a new microwave? And it has a bunch of questions that gives a sense as to if people are going to be spending money soon or not. And the lower this goes, it means people are closing their pocketbooks and saying, no, we're going to hold off until things get better. Now, oddly, inflation expectations were higher, and so, interesting, when expectations of prices are going to be going up, you'd think, okay, well, people have to buy now, so they don't have to buy later when it's going to be even more expensive. So interesting little dynamic going on there. Any way you look at it, the way I see it, bad news is bad news. This is bad news. As much of slowing indicators that I see going on, it's certainly not priced into the S&P 500. We're so close to all-time highs, ending this week on a solid green candle. I mentioned last week how this looked like a hangman, and that is oftentimes an indicator for a reversal. I thought this would have turned over, and instead we went straight up. Now, granted, we did not go above the previous high in the market, and so there will be a lot of resistance, at least there, if we get there. But I'm still expecting next week's CPI and PPI data to come in lower than expected. And if that does occur, actually, there will be resistance here. But I'm afraid to say, I think I was wrong with my crystal ball saying that we won't see new highs. It looks like we might be going towards new highs in the stock market for now until people are completely out of money, I guess. I don't know. I guess we'll see how this plays out. On a daily time frame, however, as strong as the weekly looks, I drew this pattern yesterday or the day before. Yeah, I think it was yesterday, noticing there was a wedge, and amazing how we stayed exactly within this wedge. It was such a tiny little candle today. And so with this little candle on the daily, with my crystal ball and all, perhaps this really is a top here, and we see a breakdown. Again, I guess we'll see what happens. I stated yesterday as well, it looked like we were headed into neutral. It's exactly what happened. Went from fear, now we're in neutral. The question is, are we going back into fear, or are we going to have another greedy rally in the stock market? It's hard to imagine another greedy rally, but dumber things have happened. Supporting the bearish view on a daily time frame, HYT, high yield corporate bonds, we had an engulfing red candle breaking out of a previous wedge. This is a pretty powerful move, and chart wise, this looks like it wants to go at least halfway down the wedge with pretty high probability. And if that happens, the stock market basically loses its legs and will have to follow. And I mean, who knows? This could be a top in. I said yesterday, if we broke out of this wedge going higher, I'd eat my own hat. Looks like I don't have to, because it really decisively broke out of this wedge going down. So thank goodness for that. Now that I don't have to eat my own hat. This is the VIX. This is the fear gauge priced into options contracts. Again, I said 2 days ago, I believe Gareth on his show said he was buying the VIX. I didn't understand why, and it's breaking down. I tried zooming out of this chart, by the way, and drawing all sorts of lines and parallel lines, and I can't figure out what's going on here. Just simply the VIX isn't worried. It's kind of, markets are sort of settling before the CPI and PPI, and that typically happens. It's kind of like everybody has to just go to a neutral position. Like, don't, not crazy, like things are going to go way up, things are going to go way down. It's kind of like the players take everything off the table and wait for the CPI to come out, PPI. It comes out, and then they sort out it, they battle it out, and then a trend starts to happen, and then we go from there. So that could be what's going on here. On this show, I've been talking about TNX. This is the 10-year Treasury note yield, and we are in this parallel channel here. We've been since the beginning of 2024, or even before 2024, and I've been saying yesterday, I said this big red candle looks like it had the kind of momentum that looks like it wants to break through, and today we had what's called an inside day, and so that's a weak move, and so the opening and closing is within the previous candle, and so what an inside day means, the trend will continue, and both on a trend from back here as well as the trend of the candle by itself, both of those spell more downward movement. And so see, if CPI and PPI do come in very or weaker than expected, or very weak, we could break through here, and like I've been saying, this could set off a much lower yield, which would it should help me out a lot. I got more TMF today. I have legitimately 50% exposure to long treasury bonds now, with the leveraged part combined with the 0Z, a TLT alternative fund. So here on Robschild, we need to predict the future, and we need to predict it correctly, because if you really want to crush the markets, that's what you have to do. You have to predict the future, and you have to be right. And with me and my crystal ball, we're gonna do it. 100%, not investment advice. I'm unsure what happened to the July meeting probability on the Fed funds futures today. Yesterday we had basically a 31% probability of a cut, and it got reduced to a 23% probability. That's a pretty big move, and then we had the no cut go from 67% to a 76%. I don't know what's going on here. I would have expected it to go the other way, to be honest, considering the consumer sentiment being lower. But with consumer sentiment being lower, you kind of expect, okay, well, that means inflation can go down. But again, it sounds like part of that survey was expectations of inflation, so maybe that had something to do with it. I'm not really sure. But I did find this to be somewhat notable, and with less cuts priced in, it's like that can put downward pressure on stocks for sure, and upward pressure on yields. But again, the stock market is like still near all-time highs. It's a quite silly situation, but I digress. Moving on. Next chart, silver miners has finally broken out of, we had a top back in 2023 in April. This is SIL, the ETF for silver miners, companies that produce silver. Silver by itself doesn't look like doesn't look like it's breaking out or anything, but this is getting interesting here. I had talked about, I was in silver. I got in when I thought it was low. I got out when it started going up, and I'm not in silver, not exactly directly. I have REMX right now, which does have some silver exposure, but it is notable that we're breaking higher. This, when you zoom out, a zoomed out perspective, are silver miners going to start really increasing in value, or is this just some kind of blow off top thing? Hard to say. I think it was yesterday I had this. Yeah, it was yesterday. I mentioned the Qs, triple Qs, reverse, inverse head and shoulders here. And so you have the neckline here, you have your shoulder, head, and I said this could be a shoulder looking like it would break, and it did. It broke through it today, and so if this plays out the way head and shoulders typically do, which have pretty good probabilities to them, yeah, we could be going up to 470 in the Qs. So I'm glad I'm not short right now, and I'm also glad I'm not long, to be perfectly honest. Happy to be sitting in mostly cash and treasuries with exposure to China, Brazil, REMX, and that's basically it. Anyway, that's all I have for you for today. Thanks for watching. See you next time. Robschild.